Hi, and welcome to the monthly outlook as presented by Centrum. I'm Manish Jain, the head of fund management. And today we are going to be talking about what is going on in the market, especially in the circumstances where we are, and what should be your investment strategy. Now, just when everything was looking like it's going well, the Q3 earnings were great, inflation was under control, the GDP numbers for the last 3 quarters have been averaging above 8%. The budget was good as far as the fiscal deficit is concerned. We saw the expenditure as far as defense and government spending, capex is concerned, was all coming back. They say that when everything is too good to be true, sometimes it probably is. I think that's essentially where things played out. And we had this whole embargo on the international geopolitical front where the skirmish between US, Israel, and Iran broke out, essentially putting in danger the entire bulk of the crude supply as far as the Asian markets are concerned, the gas supplies are concerned, pushing uncertainty up in a big way. And that's essentially what is reflecting in the market today when they're trying to test 23,000 levels constantly, right? The markets in the recent history have never been as volatile as they have been for the last maybe 2-3 weeks thereabouts. And if you're concerned about that, ideally you should be, because it's not like as if you're going to be completely isolated and insulated from this. There is going to be a little bit of an impact. If you see, rupee has touched intermittently closer to 93, 94 levels also. Crude has gone up above $110 also intermittently. Our crude buying basket price has been upwards of $150 also at a certain point of time. So inflation is going to move up, and that's something that we need to be prepared for. There is going to be an impact as far as the current account deficit and the balance of payment is concerned. Again, that's something we need to be mentally prepared for. And what this is doing is, because of the supply disruptions and because of the crude prices moving up, both in Q4 and to a certain extent in Q1 as well, there is going to be a margin impact, which is going to happen. Now, what that essentially means is that Q4 earnings, I think by and large, everybody is reconciled to that on a trajectory-wise basis, it's going to be lower than Q3, right? And that's something which, as long as it was intermittent, we kind of accepted it. But Q1, again, is going to be something which is going to get impacted. Now, to what extent, how much, we don't know, because the uncertainty still continues. Every day you hear a new narrative, every day you hear a new news. It's certainly not as short-lived as we thought 4 weeks back as it is going to be. Now, in that respect, what I would advise people to do, what we at Centrum would advise people to do, is to look at the domestic economy stocks, some of these which are available at bargain basement prices. If you look at large banks, for example, some of these are available at lifetime low valuations. And I'm not talking about one or the other. As a basket, if you look at the top 4 or 5 banks in India, all of them are like that. Right? It's a great time to pick those up. If you look at IT, for example, doesn't get impacted by this embargo at all. And again, available at basement bargain prices, some of these EMS companies again. So the idea is to build a portfolio now, keep buying every week, every 2 weeks, whenever the market is in a little bit of a correction mode, keep deploying money, keep buying a little bit from a 2-year perspective. Because the domestic economy still continues to remain very, very strong. Yes, there are going to be some repercussions. For example, the near-term rate cut cycle most likely is going to be over. Inflation is going to shoot up. But I think you should be mentally prepared for the next 3-4 months of volatility as far as macroeconomic numbers are concerned and the fallout of this war is concerned, which is going to play out. But having said that, on a broader base basis over the next 2 years, this is a great time to actually invest in equities. And that is what you should be doing. See, remember, every time, and this is something which I'm not sharing with you for the first time, but we've spoken about it earlier as well, is that we tend to overplay the impact of situations in our own minds. And if you look at any large incident, whether it's COVID, whether it's demonetization, whether it's the Lehman crisis, whether it's the emerging market currency crisis, we've always overplayed the impact. And the correction has always proven to be an opportunity to build a long-term position in the portfolios. And I think that's essentially what you should be doing right now. Take advantage of the situation. Be greedy when everybody around you is scared, right? And the time to buy is now. Happy investing.